Hey, it is the beginning of the year, and I want to start going over some basics for your business. As in, today we're going to cover startup costs and hobby loss rules. So, this is for people who are just starting a business and, or maybe they started it last year and they're wondering, can they write off their expenses? So if this is for you, make sure you pay attention for the next few minutes as I go through these rules for you, because it's important to understand. So the first thing that you need to understand is that every dollar that you spend on business expenses before your very first dollar of income is captured as a startup expense. So there'll be a startup bucket, and like you'll have expenses before your business really gets going. And yes, we can write them off, but it's a matter of when. So we're just going to keep on keeping track of these expenses. Once you earn revenue, you earn your first dollar in your business doing what you're supposed to be doing, then that expense is now considered an ordinary deduction. I'm going to explain a little bit more about this in a second. The first thing that you need to know is that if you started your business last year, you started it this year, you need to keep track of every single expense that you are putting into the business. And if it's ordinary and necessary for your business, it's write offable. So, say you're getting an LLC. There's paperwork. There might be attorney fees for this. That's write offable. Opening up a bank account. There's normally a fee every single month to have a bank account open. That's write offable. Say you need to go travel or do some things to be able to research to see if you want to open up this business, or maybe if you're looking at buildings to be able to start an office in, like those types of things are all write offable. But you want to be keeping those receipts and you want to be keeping track of them, okay? Because it depends on when you start making money, if it's going to be classified as a startup cost or if it's going to be classified as an ordinary deduction. And the reason why this is important is because the startup expenses, when they occur, you can only write off up to $5,000 of startup expenses right away. And that's if your expenses are less than 5 grand. Your startup expenses are less than 5 grand. We can write them off right away if they're less than 5 grand and you have earned income. Okay. So anything that's over 5 grand and under $50,000, we don't get to write that off right away. We get to write up to the 5 grand off right away. And then anything else that's considered a startup expense, and this is expenses that you incurred before you started making money in your business, we have to amortize it over 15 years. That's a really long time. You need to be considering and thinking of those things. And if your startup costs are over $50,000, then the amortization actually differs. Like you can't write off up to 5 grand right away. Like it really starts differing once you get over $50,000 of startup expenses. Okay, so another thing that I want you to know about is that some people think that they have to have an LLC in order to write this off, or that they have to have a separate business bank account in order to write these expenses off. That is false. You do not need to have an LLC or a separate business bank account in order to take these write-offs. However, I do highly recommend that you do open up a business bank account. That's really, really important. And then if you're pretty serious about this business, and I would also recommend opening up an LLC. So those are like best practices. And the reason why I say that is the LLC is going to protect you against lawsuits. And the LLC, and I say that, like, say if you have a customer who gets really mad at you and they try suing you, if you have an LLC, they're not going to be able to get your personal residence. So having an LLC or a separate bank account is just best practices, in my opinion. But everything's different. It really depends on the situation and what you're doing. All right. So there are some things that are not considered startup costs right from the get-go. And these items, they are going to usually incur, not usually, but they may occur before you actually start having income in your business, but they don't fall into the startup bucket, which is that bucket I was talking about at the beginning of where we're saving all these expenses until you start having income, right? So, what are some of these startup costs that we're going to be able to write off immediately as soon as your company has income? They include organizational costs to get the business up and running, real estate costs, research and development, taxes and interest, inventory, and long-term assets. I'm not going to go into detail into them. So if you have more questions on what I'm talking about, that's when you will want to book a discovery call. That's when we can get more into the weeds of your situation because every situation is different. Okay, so the next piece of information I can give you is to get out of startup mode. What does that mean? That means start earning revenue in your business as soon as possible. Because the sooner that you can book this revenue, start collecting revenue from clients, that means the sooner that we can start having expenses that are ordinary that we can take on your tax return as an expense right away. Remember, the longer you build up your startup bucket, the less you're going to be able to write off right away. Remember, you can only write off up to 5 grand on that first tax return of startup expenses. Otherwise, we have to amortize it over 15 years. So that's a really long time. So the sooner you can start making money, generating revenue in your business, the better. And if you get over the $50,000 worth of startup expenses, like we just need to have a conversation because you're not going to be able to write off what you think you can. So that's why earning revenue is so important when you get your business going. Okay, so now I have to talk a little bit on hobby losses because you need to know this when you're starting your business or if you've been having a business that hasn't been making any money. So you need to show a profit for 2 out of the past 5 years when in your business, or you may get a nasty letter from the IRS saying, we think that you have a hobby, we don't think that you have a business. And then you're going to have to prove to the IRS that you have a business and you are really trying hard to make it profitable. So you can probably go like another year of, hey, I'm just a bad business owner. I'm really trying hard. But if ultimately, if we cannot turn things around and make this business profitable, the IRS is going to go back to when you started this business and they're going to be like, oh, you don't have a business, you actually have a hobby. And if you have a hobby, whatever income you make, that's all you can write off in expenses every year. You don't get to write off all those expenses, like extra expenses. So just remember, 2 out of 5 years, you can have a loss in your business. Otherwise, you might have to fight having a business. You're trying to have a profitable business with the IRS, or they'll claim it as a hobby loss. And what really, really sucks about that is they're going to go back 2, 3 years. And that first year that you started your business, they're going to be like, oh, it wasn't a business. It was actually a hobby. And like, say you only made 5 grand of income that year, but you had $50,000 worth of expenses. You'll only be able to write off 5 grand of expenses to zero out the 5 grand of income, and that 45,000 loss that you claimed, like you should have paid taxes on that. It's probably reducing your other income, like say you have W-2 wages, and that 45,000, and these are just the numbers I'm using right now, will get added back into your income. You'll have to pay taxes on whatever tax bracket you are in. And then you'll have penalties for paying it late. Like there's penalties and interest to go with that too. And like we do not want to get into the hobby losses. We just need to make sure that your business is profitable. And sometimes that means that we don't take all the expenses that you actually have because we don't want to even go down the road of having a hobby loss with the IRS. So even though you actually had say $45,000 worth of those expenses. If it's year 3 and you still have a loss, we may need to discuss that we're not going to claim all of those losses on your tax return, and that we will show a small profit just for that we don't go into this hobby loss thing. So just because you have those expenses doesn't necessarily mean that you should take them. So that's just one thing that we can do to avoid this hobby loss and having you pay taxes on all the expenses that you originally took and that you're not qualified to take. So that is all that I have to say to wrap up this information on startup expenses and hobby losses. And if you are just getting started with a business, or you've been in business for a year or 2 and like you have lots of expenses, like losses still, like let's book this meeting, because one, there may be something wrong in your business that you may not know about what's happening. So maybe you need CFO services. That's where clients come in and they're really, really good at what they do, but they're not great at running a business. They don't know how to run a business. They don't know the things that they should be doing to properly run a business. And that's where the CFO services come in. But if you're just like, hey, like all these expenses and like I think I might be in the hobby loss, like we can have those tax advisory meetings too, for that I can really guide and direct you on what are expenses, what are startup costs, what should you be writing off, what shouldn't you be writing off. So we can have those conversations too. And it all starts with booking a discovery call. Uh, our admin, Liz, is the one who normally takes those discovery calls. She'll be able to help determine what you need for your business just by having a 15-minute phone call with her. All right. Hope this was helpful. If it was, go ahead and subscribe and like and share this information out. Thank you.